Redfin just came out with their latest report saying that home prices declined for the first time in 10 years. What?
Jesus.
Okay, so of course I get a little excited about that, but then I remember this is Redfin. You know how I feel about the clickbait, the stuff that's out there to, to draw people in, to make them think like all these crazy things are happening in the real estate market. Bless you, my dog.
Aww.
But I'm here, as you know, to be real with you and to give you your dose of real estate reality. So let's talk about, did prices decline for the first time in 10 years? Yep. Bless you. But is it enough to make homes affordable? Like, did they really come down? Stick around. I'm going to talk about this. And I'm also going to share with you Larry Yoon, who is the chief economist for the National Association of Realtors. He has a different perspective on what's going on with this housing market and the prices. So this is a good one today, guys. So stick around. Let's get started. Okay, so obviously you can imagine my excitement when I saw this headline. Housing market update. Home prices fall annually for the first time in a decade as mortgage rates pass 7%. Wow. Really? The prices are coming down. Oh my God. All right, let's look at this. Let's see just how much are they coming down. U.S. home sale prices have fallen from a year earlier for the first time in more than a decade. The milestone comes as mortgage rates hitting their highest level since November. Sideline buyers and sellers are forced to lower their asking price to accommodate high rates. The typical U.S. home sold for $350,246 during the 4 weeks ending February 26, down 0.6% year over year, marking the first time prices have dropped since February of 2012. Really? They didn't even come down 1%. Oh my God. I mean, that's a real bummer. Look, especially if somebody's looking for prices to come crashing down, yeah, that's pretty pathetic, less than 1%. But it could be a positive sign for things to come. Maybe the prices will start trending down from here, but I got my own opinion on that, and I have more data to share with you to really show you what's really going on here. Could they continue to go down? Possibly, but let's continue on. Redfin's chief economist, Taylor Marr, goes on to say in this article, prices falling from a year ago is a milestone because it hasn't happened since the housing market was recovering from the 2008 subprime mortgage crisis. But it's not surprising, and in many ways, it's welcome. Home prices skyrocketed so much over the last few years that they were likely to come down once rates rose from historic lows. Mortgage rates rising to the 7% range was the straw that broke the camel's back, dampening home buying demand and leading to sellers asking less for their home. He goes on to say prices will probably decline a bit more in the coming months, but first-time buyers hoping to score a major deal this year are likely out of luck. That's because so few homeowners are listing their homes for sale. Limited inventory and continued interest in turnkey homes in desirable neighborhoods will keep prices somewhat propped up, and high rates will continue to be a hit on affordability. This is the clickbait I try to warn you about. You got to be careful with what you're reading here when you see these headlines. I'm going to be honest with you. A friend of mine shared this article with me. As soon as she saw this headline, she texted it to me and she like, look, home prices declined for the first time in 10 years. And I saw that. I'm like, I already knew about this article. And I wrote her back. I said, yeah, less than 1% doesn't mean a damn thing. It doesn't. And in some markets in this country, we're still seeing price increases. They are. So again, don't get excited about this and don't get like wrapped up in like, oh my God, the world is crashing. The housing market is crashing. No, it is not. Let's continue on to see where Redfin is pulling this data from. Now, these are the leading indicators that they say, the leading indicators for home buyer activity. Now, they said here for the week ending March 2nd, average 30-year fixed mortgage rates rose to 6.65%, marking the fourth straight week of increases. The daily average was 7.1% on March 2nd. Mortgage purchase applications during the week ending February 24th declined 6% from a week earlier, seasonally adjusted, reaching their lowest level since the early 1990s. Purchase applications were down 44% from a year earlier. The seasonally adjusted Redfin Homebuyer Demand Index, a measure of requests for home tours and other home buying services from Redfin hit its highest level since September. It was up 1% from a week earlier and 3% from a month earlier during the week ending February 26. It was down 24% from a year earlier. No kidding. That's because the rates were like half of what they are now a year ago. So, of course, you're going to see that decline. Google searches for home sales were up 44% from the trough they hit in December during the week ending February 25th, but down about 18% from a year earlier. Oh my God. Oh my God. Touring activity as of February 26th was up 12.1% from the start of the year, compared with a 14.4% increase at the same time last year, according to the home tour technology company Showing Time. So when you're comparing year over year, when you look back at 22 was just a buying flipping frenzy because the rates were in the twos in some cases, mostly in the 3% range. This time last year, February, going into March, it was then when we started to see interest rates climb up to like 4%. There was a little bit more panic because people wanted to get in before those rates went up. So that's why you saw such a flurry of activity. Now, let's take a look at these two charts that Redfin put in here. Okay, so here's the chart they show you right here. The median sale price is 0.6% year over year. Now, if you look here, the orange line represents 2023, the red is 2022. So as of February 26, you see they show the tiny little decrease of 0.6%. That's not a bargain, guys. Sorry. But now let's move on to this next chart where the median asking price was up 0.6% year over year on February 26. Does anybody see this? Does anybody see what's going on here? To me, that's a wash, right? I don't know. Call me crazy. I don't know. Is that really considered a real price decrease? Now let's move on to what Larry Yoon has to say. As I said before, Larry Yoon is the chief economist for the National Association of Realtors. He was recently on CNBC talking about his perspective as to what's going on in the housing market and what he thinks what will happen this coming spring and through the rest of the year. So check out these clips right here.
So are prices falling right now? We know rates are rising, and supposedly when the rates rise, the prices are supposed to fall. Are we seeing the prices fall? And is there any chance we're going to get back to those rates that we saw in early 2021 and before, maybe 3%, 4%? Any chance?
National median price in the latest up 1% in January compared to 1 year ago. So it is still up, but that's the national average. So if one looks at individual markets, for example, San Francisco, Seattle, prices are falling. But at the same time, in other areas, say Atlanta, in other fast job creating areas, prices are still rising. So I would say half of the country is seeing modest price gains. Other half of the country, modest price decline with few exceptions like San Francisco, where prices are down roughly 10%.
I think you just dashed a lot of hopes. A lot of people are hoping to hear you say the rates are going to fall dramatically and the prices are falling too at the same time.
You got to do me a huge favor. I know this information is so super important and you want to move on and keep watching. I get it, but you got to hit the like button for me, like right now. And then subscribe if you're not subscribed to the channel. Thank you. He's saying in January, prices were up 1%. He doesn't obviously say what's going on in February, so it's kind of hard to compare what Redfin is saying. Now, here is what Larry actually has to say about this upcoming spring market and for the rest of the year.
It's going to be driven by the direction of the mortgage rates. The past week, some bad inflation numbers or the inflation remaining stubbornly high is keeping the mortgage rate a little elevated. But once inflation comes down, mortgage rates should be much more attractive. For the remainder of the year, I think there will be some steady growth in home sales. Buyers, they understand the long-term wealth gain potential from home ownership. And we still have that housing shortage we alluded to earlier. So this housing shortage will not go away immediately. And consequently, is it a buyer's market, seller's market? Well, it's time for negotiation. I think people who are good at negotiation will get that right price they desire.
He said it right there. So if inflation comes back down, the mortgage rates come back down, but then what happens? It brings more buyer demand back in and it's going to drive the prices up. I don't know if they're going to go up any higher than what they are right now, but they will keep the prices elevated. If you watched my video a couple of weeks ago, I talked about this very thing where a drop in mortgage rates does not make a home affordable. They can make them stay the same, like just as expensive, or in some cases more expensive. Now, you heard what Larry said here, that half the market is seeing price increases, and there's a half that are seeing decreases. This is a national average. If you want to get information about your specific market, if you're thinking of selling or you want to buy in a specific market, get with a local real estate agent to understand what's really going on in that market, to truly understand it. Larry goes on in this next clip to point out what the key indicators are to gain an insight as to whether the prices are going to go up or go down. Check this out.
Anything in particular that you think is especially important and that'll give us the biggest insight into the housing market and the changes?
Mortgage rate is always a big driver, but second number is just job creation. America is still creating jobs, meaning that the pent-up housing demand is still building up. It's all about the mortgage rate to make homes a little more affordable. So once the mortgage rate drips down a bit, one can again see the reopening of the gates for the home buyers to re-enter. Now, it's not going to be a frenzy condition. 20% price gains, no, it's not going to happen. But say steady 3%, 4%, 5% annual gains, those are very plausible expectation in the upcoming years.
Okay, so he says it right there. The gains that we should be seeing here on out are not like what we saw over the past couple of years. He's saying the more plausible gains of 3%, 4 or 5%, that is more in line of the types of gains we're going to see in the rest of this year and in the coming years, which is more of a normal market. The good news is if the rates do come back down, yeah, you're going to have more people coming in and bidding on these homes. I don't think, I've said this I don't know how many times now, I don't think you're going to see prices go escalate way over asking unless a home is grossly underpriced. And I'm not trying to call out real estate agents, but there are some out there who've been artificially underpricing homes. There, I said it, I'm sorry. It has happened. And it's all for the purpose of to make themselves look better to future clients, to say, look, I sold this house. I got 50, 60,000 over asking on this home that I sold. Well, duh, you underpriced it to begin with. Okay, but I digress. So the key indicators, again, the mortgage interest rates and the job market. The job market right now, it's still pretty strong, although there are some difference of opinions out there about that. But for the most part, job creations are strong right now. And the interest rates, if they come back down, if inflation comes back down, mortgage rates will come back down. Will it create that balance for buyers and sellers? That is my hope. My hope is that if the rates come into the 5% range, and this is what I've been saying for the past few months, if they come down into that range, I think it may be enough to entice sellers to sell their homes and to be able to buy a new one because they have so much equity in their home right now. My thought is you now have all that extra money that you made on your home. Your value has gone up. You can take that to put down on the next home to possibly borrow less. So that interest rate, 5%, 5.5%, may not hurt so bad when you get your next mortgage because won't be borrowing as much. That's my thought. Tell me, what do you guys think about that? Do you think that's a possibility? Do you agree with me? Do you not agree with me? Let me know. But do me a favor, be nice about it. Okay? Be nice to me in the comments because I've had some people not be so nice and I don't like that. Let's just have an honest conversation.
You got it, dude.
So as always, I am here to give it to you straight. I'm not trying to be the bearer of bad news. I am the bearer of real information and the reality as to what's going on in this real estate market.
Bravo!
So if you need assistance to find a real estate agent in your area where you live, or if you're looking to buy or sell here in New Jersey, you got to go check out my brand new website. The link is down below in the description box. If you click on that, there is a form at the bottom of the first page where you can put your contact information. It'll get sent to me and I will respond to you within 24 hours. And I would be so happy to assist you. If you need more tips about navigating this crazy housing market, you got to check this playlist out right here. Really, really good information. Thank you so much for watching me today to get your dose of real estate reality. My name is Jackie Baker and I will see you next time.